Welcome to TradeTheNBI.com. This is John. This report is for the 24th, and we're holding on right at the base of the dip that we took place just a little while ago as the fear of the vote for the repeal and replace, because there's a lot to it. I mean, you have the economic impact of it on the economy, coupled with the fact that if it doesn't pass, it's likely that tax reform and these other things are going to fail as well amongst inter-party bickering, and this will have a huge downside effect. So evidently they're doing an up-down Friday vote one way or another, and that's going to be it. So we should have some potential fireworks. We don't know the time yet when that will take place, but if it's during market hours, I think that we can expect a whole host of gyrations, the build up to it, and then if it's successful, you certainly would get a significant move, I think, breaking out into the highs. We will have to see how that goes. The euro still holding up strong because it looks like a bit of chaos within the U.S. is going to perpetuate no growth. Slow growth policies. Fine, there's been an uptick in activity, but it can only be sustained with the proper backup, and you'll definitely see the market retrace into that. And you can see the flight to quality. Some optimism has pulled it back. It's still a bit outrageous for treasuries at this point to be on the long side. Oil, again, it's just flat and going to stay that way. Even when we were in this lower range, there was a little buyback to it, but it's a tough situation for oil producers. They're driving costs lower and lower, and if they're able to sustain it under reasonable margins as far as production, then it'll be okay. But we have to see if OPEC is going to cut their production, or if they're going to maintain, and then the glut could cause some real distress going forward. So that's also benefit from a deflationary standpoint, but you got to have growth, and that's tied to some of these other things. So there's no one piece that's going to move it. It's all going to happen in a concert. Gold. It's going to be an easy rise for that, particularly as uncertainty goes. So we could see that going through, we end up with some short signals. We've got a buyback in there, and then we started breaking down. The shakeout was right about there. It was almost exactly even to where the entry was, and then we dipped below. Just got a turnaround as we ended up with buy signal that first took place right over here, but we were above the 13.5, so you'd have to wait for the steel to go below the -7, which gave you this entry right about here at the close, 23.40, and we saw a pop-up in the after hours as it looked optimistic that a deal may be worked out, but that appears to have faded off completely, and this is the back and forth that we're going to be seeing. So it's going to be jumpy. So no objection to that, but I think that if you see a failure, you certainly know that the direction for the market is probably going to be significantly south, because it puts in a lot of jeopardy into future prospects. So this is what the market is all about, expectations. You either meet them or you don't. If you don't, you pay for it. So one way or another, it's going to be positioned with what happens and go from there. From the daily standpoint, when we look at the general readings, you've got strong short-term buying keeping this afloat. At this particular, we haven't seen midterm buyers jump in. Get some stability from longer term, but you're caught in that no man's zone with the orange. If this were going to take off more, you would expect to see the orange dipping down much stronger to give a reset buy like it did back over here, even when we had the pop-up. But you got a very similar retrace to the last pop break that took out and led us all the way up here. So just to follow the readings, go where they take us. But at this particular point, news is certainly moving things at this particular point. So we'll keep following it. As always, I'll keep posting on the Skype chat. Trade well. We'll talk again later.